Ladies and gentlemen, welcome back to the channel. We have a big week coming. Let me give you the rundown here. You have big earnings. You have some economic data. You also have a speech from Fed Powell. Now, that's going to be important, and I will break down how I think the markets are going to react to this, what this week could look like for stocks. We'll go over some seasonality that I want you guys to keep in mind, like the fact that July is typically a very strong month, but there is some weakness in August sometimes, and there is more weakness in September. This kind of coincides with the August 1st tariff deadline. It kind of coincides with what could be additional sanctions and additionally large tariffs on countries that purchase oil from Russia. Now, I don't think China is going to get hit with another 100% tariff. Trump and Xi Jinping are going to have a meeting in person over the next couple of days in South Korea. And I do think that would really be a walk back of the progress in terms of just overall relations between the U.S. and China. And I don't think Trump wants to do that. So we'll talk about it here in this video. It's going to be a big week. Hit that like button and subscribe to the channel if you have not done so already. Also, check out the link down below in the description of this video. What we are doing over there is going out and finding value in small companies. Now, they don't have to be small companies, but usually when you can identify something that the markets don't really understand, it's typically in small caps because there is less institutional ownership, there is less analyst coverage, and there's typically not as many retail investors that know about it. So what I'm doing is going out, finding companies where I'm like, why is the market not fully appreciating this company? Nebius, I bought that at $22 a share. It's in the 50s today. I bought IONQ, the quantum computing stock, at $7 per share. It is in the 40s today. I bought Applied Digital at $3. Today, it's over $10. I bought Novartis Semiconductors at $2. Today, it's over, what, $7? I bought even HIMS at 17 to 20. The stock today is in the mid 50s, low 60s, right? We're just going out and finding that value in smaller companies that Wall Street is missing. Link down below in the description of this video if you would like to come join us. It is the most unique community in the world. Now, I will keep in mind, I will remind you that none of what I say in this video is a recommendation. None of it is financial advice. You could lose money if you blindly trade what anyone says or what their opinions are. But with that, let's get started. Now, in the news today, Lutnick says he is confident that he will get a deal done with the EU. Lutnick argues that Powell cost the U.S. $700 billion a year by keeping rates up. He also says that Powell has held interest rates up way too high. He says that mortgage rates are 2 points higher than they should be. Lutnick says that August 1st is a hard deadline for tariffs. He says he spoke with Europe trade officials this morning, and then again went on to say that he believes a deal will get done. Lutnick says that small countries to pay a baseline 10% tariff. Lutnick says he expects Trump will absolutely renegotiate the USMCA trade deal that is between the United States, Canada, and Mexico. Donald Trump and Xi Jinping are tipped to meet ahead of or during the APEC summit in South Korea. So it looks like the relationship is getting better, which is a good thing. As I've talked about on this channel before, we are already in a Cold War with China, an AI Cold War. Now, if we just have friendly competition in AI between the two countries, great. Like, that's awesome for the markets, great for your portfolio. As long as it doesn't go into deeper things like, you know, military issues and a larger actual conflict or something along those lines. Cold Wars, at least the last one we had, spurred a lot of innovation. Like many of the technologies we have today would not be here if we did not have the Cold War. Like, do you want to hear a crazy thought? We may just now be getting smartphones if we never had the Cold War. Like, that's how that's how much innovation was spurred during the Cold War. Like the Cold War, semiconductors were created during the Cold War, right? And really that even technology was spurred by competition. Okay. Crazy thought to think that we may just now be getting smartphones if it wasn't for the Cold War with the Soviet Union, which you could argue would, maybe have been a good thing. Technology has had its issues on society for sure. Japan's Prime Minister Ishiba told Minister Akazawa to visit the U.S. tomorrow on Monday. Japan's Prime Minister Ishiba to exert full effort in tariff talks before the August deadline. So they are trying to get a better trade deal. And he says again here that he will tackle U.S. tariff issues before the August 1st deadline. Iran agrees to nuclear talks with the UK, France, and Germany. Now, apparently Besant made the case to Trump against firing Fed Chair Powell. Like, I love Besant. I mean, this guy is the perfect person to be advising Trump on different things. Besant is a billionaire, for one, if you don't know. But not even that. He worked on Wall Street his whole career. Like, he understands that firing Powell, even as I said, would likely cause markets to crash. Now, the question would be like how long would that last? Because that means we're getting rate cuts faster. And there is a positive aspect to that. But it would have been uniformly negative to fire Powell, and we've seen how the markets reacted. I believe that was on Wednesday or Thursday of last week, based on the comments that Trump may fire Powell soon. U.S. Treasury Secretary Besant told Trump that the Fed is already signaling rate cuts this year. And just in case none of us are familiar here, July is one of the strongest months of the year for basically everything, okay, historically, from a market seasonality perspective. Now, August, things get a little shakier. The S&P tends to be negative 0.15%, IWM down 0.86%, and the NASDAQ up 0.53%. Seasonality gets really bad in September, though. So again, with some of the August 1st deadline, some of the Russia potential sanctions and higher tariffs, there could be a period of volatility coming, but I think it's a little early to get outright bearish on that. But again, if you have large gains in your portfolio in stocks that you don't think are going to, double or triple or 5x over the next 2 years in this AI revolution, maybe the capital is better put elsewhere. For example, I bought Robinhood in the 40s. I sold it at 100 recently, right? I bought it like 2 months ago in the 40s. It went up to 100. Like, do I think Robinhood's a good company? Yeah, for what it's worth, right? Do I think they'll do well in the future? Yeah, for what it's worth. Do I think it's going to double in the next 12 months? Probably not. Whereas I think other stocks could easily double in the next 12 months. So that's kind of how I'm looking at my portfolio. Just wanted to throw that in there. Now, first things first, I want to get into the latest headlines on trade, what Lutnick said, what Besant has said about even Jerome Powell. Now that that is out of the way, in this upcoming week, we are going to have a bunch of earnings. Starting off tomorrow morning, Verizon, Domino's, Cleveland Cliffs, Roper Technologies, Ryan Air, and some others. In after hours, NXP, that is a major supplier to Apple. So that could give you a little bit of an insight to what Apple could report. Again, NXP has good numbers. It's going to raise the odds of a good report from Apple as well, although, again, not guaranteed. Steel Dynamics, AGNC Investment Corp, Calix, Crown, and some others that report Monday and after hours. Things really get rocking and rolling on Tuesday. Lockheed Martin, Coca-Cola, Philip Morris, DR Horton, GM, RTX, KeyBank, and some others report Tuesday morning. Tuesday and after hours, Intuitive Surgical, SAP, Enphase, Capital One, Texas Instruments, and others. Wednesday, pre-market, GE Veranova, Amphenol, AT&T, Thermo Fisher, Fiserv, General Dynamics, Hasbro, and Next Era Energy report. Wednesday and after hours, Tesla, Alphabet, ServiceNow, IBM, Chipotle, QuantumScape, Alaska Airlines, O'Reilly Auto Parts, Molina Healthcare, and United Rentals. Thursday, pre-market, American Airlines, the Blackstone Group, Nokia, Dow, Southwest, Flex, Union Pacific, NASDAQ, Keurig, Dr. Pepper, and Honeywell. Thursday and after hours, Intel, Newmont, Deckers Brands, Scholastic, Boyd, and Coursera. And then Friday pre-market, Centene Corporation, HCA Healthcare, AutoNation, Charter Communications, Boots Allen Hamilton, and some others that will also be reporting. Now, in the trading economics calendar, coming tomorrow morning, you have the CB leading index month over month. You have a 3-month and a 6-month bond auction. That's pretty much it. On Tuesday, you get a speech from Fed Jerome Powell. So Fed Jerome Powell, what does he say about Trump potentially firing him? He's probably going to say he doesn't care about politics. He's serving the public. He's doing his job, which is probably what the markets want to hear at this point, not that he may step down. So if he does kind of say that he's thinking of stepping down or something along those lines, which I don't think is likely but possible, that could have negative ramifications for markets. You will also get the Richmond Fed Manufacturing Index at 10 o'clock in the morning, manufacturing shipments and services revenues. Now, I will say with Powell as well, does he kind of change his stance to be maybe a little bit more dovish? That's what I would hope to see. That's maybe from some of the cabinet officials putting pressure on Powell. Now, I don't think Powell is as hawkish as people think he is. I think Powell's kind of a dove. I think he wants to cut rates, but he's just basically the front guy for the Fed, right? Like, not all of what Powell says is his exact thoughts. He kind of tries to align with the average view on the Fed, and some Fed officials are a lot more, what I would say, hawkish than Powell. But again, just my opinion. I don't know them personally. On Wednesday, you have existing home sales for June, expecting around 4 million, and that's pretty much it. On Thursday, you get the ECB interest rate decision. You get some other things that will be coming out, like Chicago Fed National Activity Index, initial jobless claims, ECB press conference as well, Kansas Fed Composite Index, Kansas Fed Manufacturing Index, couple bond auctions, like a 10-year TIPS auction, that is Treasury Inflation Protected Security. So kind of inflation break-even metric, if you will. The last auction was 2.22%. So remaining still in line with something you'd consider normal. On Friday, we will get durable goods orders month over month. The last month, it was up 16.4%. You're expecting this to fall 11%, okay? As long as you don't have an even larger drop than that, I think you're good. The expectation of negative 11% is already on the really high side. Like, you're expecting quite a drop there. So I think the odds are you could come in a little bit better, and I think the markets would really like that. But again, keep in mind some of the seasonal trends that we have talked about. It could bring some weakness around the August 1st deadline unless we start to get some constructive trade deals and we can say, okay, Europe trade deals out the way. Canada, Mexico, not really an issue at this point. China's not really an issue. Great. At that point, the August 1st deadline doesn't matter anymore once a trade deal gets done with Europe. The then question will be, what about the Russia, tariff situation? Okay. Is Russia actually going to end the war by the deadline, which is about 50 days, 40 or so days out from now? I think it's a little too early to get bearish on this right now. Again, with the strong July seasonals and just getting into earnings season. But after earnings season, early August could be a little shaky. We kind of seen with Nvidia recently that even if you report a great report, you may have already priced that in. So I think some areas, like maybe smaller cap companies, could do okay, certain industries, but perhaps the headline S&P could go up a bit more from here. I think we could actually power higher to like 650 if earnings are really good, and then get a little bit of that consolidation and some downside pressure again, just because a lot of big tech stocks have priced in good earnings. Like, you're going to have to get some surprise good news from some of those earnings to continue to really get this acceleration higher in markets. Even though I think stocks under the surface could do well, if big tech doesn't do well, it's going to drag down the broader index. Okay, which again, I think earnings are going to be good, but are you going to get that wow factor? Are you going to get that factor of, within some of these big tech earnings that really moves the stocks higher in any kind of huge way? Probably not. I think it's going to be like up 4 or 5%, down 4 or 5% for probably all of your big tech stocks. Does that really, do much? Probably not. I think you're kind of more skewed to the downside just because of how much those stocks have run so quickly. But again, as we get closer to the end of this year, after the seasonal volatility we tend to get in August, I do think stocks are going to go through a pretty aggressive run into the end of the year, because I don't think we're going to have inflation from tariffs. I think geopolitical tensions are dying down. I think trade deals are getting resolved and the trade war will be largely ended by the end of this year. I think the economy is going to hold up and we're not going into a recession. I think some aspects of the big beautiful bill, like the larger deficits, are stimulative for markets. The no tax on tips, no tax on overtime is huge for the consumer. And the 100% capital expenditures write-off is also massive, that Wall Street is really underappreciating. Okay, that means companies can go out and invest again, right? They can go out and invest, and that's going to be a big driver for the economy. Now, I also think if real estate can start to move again as rates come down, that could put some pressure on home prices, but there's so much equity in homes, even if more supply comes next year, I don't think prices are going to go down all that much, and people are going to be able to actually sell homes and take a lot of money to their bank account. So I think next year consumers could be a lot stronger than people think, because consumers have really been in a recession for many years. And if we could see the consumer get a little bit better next year, that's obviously going to be huge. And then the sixth kind of thing I'm bullish on, really over the next decade, is the AI Cold War with China. We are in an AI Cold War with China. This means we're going to have to see innovation. There's going to be innovation at warp speed because of this competition. Not just a competition versus China. There's that going on. U.S. firms don't want to fall behind China, but you also have this internal Cold War going on with all the other companies. If you're a company right now, there's someone coming after you, especially even something like Google, right? Seems like all AI companies are coming after Google's throat right now. Google's going to have to innovate. They're going to have to invest a lot. They're going to have to, go full steam ahead. And I don't think even if we were to go into recession, that's going to change. Right? And that's a driving force to keep us out of a recession. So I really struggle right now, if you want my honest opinion, on trying to find a bear thesis for this market. So in my view, that's either going to be the crux, that I'm just massively missing something, or it's going to be the thing that makes me incredibly rich, right? Is by figuring this out before Wall Street does, positioning for it and being correct, okay? I have been a bull since the 20% lows in the markets. I was calling for 700 by the end of this year on the SPY by, late April, early May, as things really turned around with the trade war, okay? At the time, it was 25% upside. Now, it's only 11% upside to get to 700 on the SPY. And I do think that is achievable by the end of this year. Some people are starting to get on board with that. But a lot of Wall Street is going to continue to chase this market. After all, a new bull market just started from the view of Wall Street after getting that 20% decline and breaking prior highs. You're only 3% into a new bull market, if you want to think about it like that. And historically, we've had 5 instances of markets falling 20% or more, or close to 20% or more, and then recovering all of that within 3 months, which it just happened. The only other time it happened faster, I believe, was 1999. It may have been COVID, but this was one of the fastest V-shaped recoveries you have ever seen in a 20% decline. And it usually leads to an over 20% additional return over the next 12 months. You're only up 3% right now. You know, theoretically, if you go up another 17%, you're looking at the SPY somewhere in the neighborhood of about 730 or 740 by the end of next year. But I do think a lot of outperformance could come from the smaller cap areas, some of the value areas within small cap, AI, energy, robotics, and biopharma, some of the main themes that I am focusing on right now in the trading community. I think some of those areas could really, really outperform. Also areas like Tesla. I think Tesla is going to be a big winner over the next 12 months or so. But nonetheless, ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. That is it. Link down below in the description of this video for the trading community. Have a great rest of your day, and I will see you in the next one.